Welcome back, and joining us on the show now is Kunal Shah from Nirmal Bang Commodities. Kunal, hi, good to have you. I want to start with the metal prices because that is a sector that seems to be doing quite well today. We've seen zinc outperform, copper trading near 3-week highs. And when you look at the last 6 or 7 trading sessions, we've seen many of these metal prices gain anywhere between 3 to 6%, 6% in case of nickel, by the way. How do you look at the sector, and do you think it's a good buying opportunity now emerging?
So first, metal prices are moving up on the back of weaker dollar. Every time we've seen the weakness in dollar has been attributed to the higher metal prices because it is dollar denominated. The directional view of the US dollar seems to be on the downside. We are expecting that going forward, dollar index is likely to drift below even 100, and we are going to see 98, 97 kind of levels for the dollar index, which is slightly bullish. And second most important factor is China. So tomorrow we are going to see Chinese GDP numbers, industrial production number, and we are going to see a bit of recovery taking place in Chinese GDP, Chinese industrial production, because of the kind of inflow. We've seen a huge liquidity infusion by the Chinese government in the last 3 months, which is aiding the growth. 50% of the metal consumption still takes place in China, and any better than expected data in China leads to higher metal prices. So we are expecting some bit of pullback in prices. Not a structural bullish view, but we are expecting, because of the weaker dollar and metal consumption likely to revive from here because of the better data. Copper prices, zinc prices can move a tad higher from here. Zinc can test levels of 260 to 265. Copper can test levels of 800 rupees, 800 to 805 rupees. So slight uptick in metal prices is expected because of the stronger data from China.
All right. How are you looking at the other metals? I mean, silver, for example, is still trading near one-year highs in the international markets, 75,000 rupees per kg, holding in the Indian markets as well. So with the strength in gold, with the strength now coming back for industrial metals, would you say silver is on a more sweeter spot?
Yeah, the fundamental of silver from the demand perspective is very bullish. We have seen the demand of silver increasing. So we are expecting even double-digit growth going forward in silver demand. And at the same time, from last 10 years, the supply side have been very muted. We have not seen any major growth in supply. The scrap supply keeps coming in the market, but this is for the first time, in spite of the fact the prices have gone up, scrap supply is not able to bring down the prices. So the inherent strength in the demand is basically causing the upside in silver futures. And we are expecting this trend to continue going forward. And silver prices are heading towards $27, $28 on CME. And on Indian bourses, it is likely to headed towards 80,000 to 85,000. So I think silver is going to outperform in precious metals.
And gold, you know, this is going to be a third straight week, fourth rather, because for last 3 weeks, we've constantly seen gold prices be able to hold around that $2,000 per ounce mark. What is the range that you see building up for this one now? Because most banks and brokerages are reiterating that 2,050, 2,150 is where we could be headed.
Yeah, so after, like you rightly said, you know, we've seen a constant upside in gold futures. I think it is consolidating right now. We've seen a major spike, almost 5,000 to 6,000 rupees upside in last 2.5 months in gold on domestic market, and on CME from $18, $20 to almost $2,050. So $200 of upside. So generally, gold gives you 10% of return, and that is what we've seen in last 2 to 3 months. So it is consolidating. The trend is still very bullish. I'm still expecting gold to test $2,100 and $2,150 in this year. And whatever downside, what we are witnessing right now, we've seen a profit taking to the tune of $30, $40. Another $30, $40, $19 or $80 seems to be the bottom for CME futures, gold. And I'm expecting gold to again resume its upward trajectory. Geopolitical tensions are increasing. Russia is Russia is not showing any sign of peace talks. China, Taiwan. So weaker dollar, geopolitical tension, and going forward, the rate hike cycle will come to an end after 2 3 months, whenever. So this all makes me believe that the US economy also likely to slow down. So all factors are pointing towards bullish scenario for gold, and 2,150 seems to be the target for me.
Okay. Kunal, a big question that everybody's asking is on whether even these levels are good to buy, because while everybody has witnessed a decline in equities and strength in gold, it's very less, and even the portfolios which had gold was a very low quantity there. So most people feel that they clearly have missed it in the first quarter. Where do you see the second quarter and the third quarter now building up? And these current levels, what would your advice be for people who want to include it in their portfolios?
Yeah, it's a very good question. So most of the people are wondering whether we are buying at all-time high, whether we'll make the top. I don't think so. The last time gold hit $2,000, at that time US Fed's balance sheet was $4.5 trillion. This time the US Federal Reserve's balance sheet is almost $8.6 trillion. So gold is still a value buy as per my understanding, and we are going to see at least next 2 years. I'm not forecasting for 5 years, 10 years, but at least for next 2 years, the bull run in gold is likely to continue, mainly because of the problems which have been created by the irresponsible printing by the Western central banks. So I am of the very firm view that even at these levels, if you buy, you are still going to make 10% return, 10% CAGR return for next 2 years at least. So even you can invest in at these levels. I'm very confident it should move up going forward.
All right. And when you say that you're expecting dollar index to go to 100, even fall below 100, what would that in sense mean for the crude oil prices then? Because here as well, we are trading at a 1-month highs as we speak.
Yeah, it's a big paradox as far as how the markets functions. You know, the moment dollar index weakens, so basically everyone wants to bring down the inflation, and when the fundamental of dollar is indicating that it is going to further weakness we are going to see, at that time the commodity will again move up. So till one point inflation will go down. Right now the inflation is mainly coming off from the housing sector in the US, but now slowly, gradually, even commodity will add up to that. I'm expecting oil to move up, $85 for the WTI, $92, $91 for the Brent, and mainly because of the weaker dollar and revival in Chinese demand to a certain extent. But I'm not expecting any very bullish trend where it is going to test $100 and go above $100. So OPEC production cuts are helping right now for prices to recover. So some bit of pullback is expected going forward, but not very bullish to the tune of $100 to $120. That kind of levels I'm not expecting still.
Okay. All right, Kunal, Manisha, thank you so much for joining in and giving us a wrap of all things commodities, crude in specific. But, just keep